Chapter 3 will explain the adjusting process. The objectives of this chapter include to differentiate between accrual and cash basis accounting, define and apply the accounting period concept, revenue recognition, matching principle, and time period concept. Explain why adjusting entries are needed and journalize it and post adjusting entries. Additional objectives include explain the purpose of and prepare an adjusted trial balance, prepare the financial statements from the adjusted trial balance, and understand the alternate treatment of unearned revenue and prepaid expenses. That's in Appendix 3A located in my accounting lab. The first learning objective differentiates between accrual and cash basis accounting. In this chapter, we'll continue to explore our exploration of the accounting cycle by learning how to update the accounts at the end of the period. This process is called adjusting the books, and it requires special journal entries called adjusting journal entries. For example, you'll see how at the end of a particular period, you must determine how many supplies you have used and how much you owe your employee, and make adjusting entries to account for these amounts. There are two ways to do accounting. Accrual accounting records the effect of each transaction as it occurs. That is, revenues are recorded when earned and expenses are recorded when incurred. Most businesses use the accrual basis as covered in this book. Cash basis accounting records only cash receipts and payments. It ignores receivables, payables, and depreciation. Only very small businesses use the cash basis accounting. Keep in mind that the accrual basis is the preferred way to do accounting, and it is required by GAAP. This exhibit illustrates the difference between accrual basis and cash basis accounting for a florist. Now let's see how differently the accrual basis and cash basis account for a revenue. Suppose Smart Touch performed service and earned revenue on May 20th, 2013, but did not collect cash until June 5th, 2013. Under the accrual basis, the business records $1,000 of revenue on account on May 20th as a debit to accounts receivable for $1,000 and a credit to service revenue for $1,000. Then, on June 5th, Smart Touch would debit cash for the $1,000 collected on account and would credit accounts receivable for the $1,000 cash received on account. Under the cash basis, the business would record no revenue until the cash receipt, which in this case would be on June 5th. As a result, cash basis accounting never reports accounts receivable from customers. In this case, cash basis accounting actually shows the revenue in the wrong accounting period, which is June. Revenue should be recorded when it's earned, which is May, and that is how accrual basis operates. This exhibit illustrates the difference between accrual basis and cash basis accounting for expenses for the florist. Suppose Smart Touch purchased $200 of office supplies on account May 15, 2013, and paid the account in full on June 3, 2013. On the accrual basis, the business records this transaction as follows. On May 15th, debit office supplies for $200 and credit accounts payable for $200. Then, on June 3rd, debit accounts payable for $200 and credit cash for $200 to pay for the supplies purchased on May 15th. In contrast, cash basis accounting ignores this transaction on May 15th because the business paid no cash. The cash basis records only cash receipts and cash payments. So, cash receipts are treated as revenues, cash payments are treated as expenses. Under the cash basis, Smart Touch would record each cash payment as an expense. So for our office supplies example, the company would recognize the cash basis expense on June 3rd, 2013, because that is the date which cash was paid. Short exercise 3-2 compares accrual and cash basis accounting. The Johnny Flowers law firm uses a client database. Suppose Johnny Flowers paid $2,900 for a computer. In requirement number 1, describe how the business should account for the $2,900 expenditure under the cash basis and then under the accrual basis. Under the cash basis, it would record the expense for $2,900. Under the accrual basis, it would record the expense at $2,900. This exercise continues on this slide. State why the accrual basis is more realistic for this situation.